Top 3 stocks that are priced under $15 that have insane upside potential. We're going to be talking about that in today's video. Now, if we look at the public account here, we're going to find something pretty fascinating. Some of the best returning stocks I have in the public account were stocks that I have an average cost basis under $15, including Palantir, average cost basis $7.39. That stock has returned 1,500 plus %. ELF, average cost basis $7.28, 839% gain. SoFi, $8.30 cost basis, up over 60% on that one. And then Revolve, $12.79, up over 34% on that one. And even if we look at my Tesla shares, right, this is a portion of my Tesla shares. If you look at that on a split adjusted basis, the cost basis on those was right around $15 a share. Now, stocks that are priced under $15 a share, we call them the double M's. It means you're either getting the mansion or you're getting the money pit, right? It's either you're going to make so much money on these stocks that, you know, they ask you, sir, how big would you like your house? And you say, bigger. How fast would you like your car? Faster. How many vacations would you like to go on? All of them. That's what you say, okay? Or they're just absolute money pit stocks and you're buying these stocks and they just do absolutely nothing. Or they just keep going down and eventually they go to bankruptcy, right? So they're either mansion or money pit stocks is something to kind of keep in mind with these sorts of low price stocks, right? In this video here today, we're going to talk about 3 stocks that are under $15 that have unreal upside potential. And so I hope you guys enjoy this. I hope you appreciate me sharing this with you and taking you through why I believe these 3 stocks have some pretty insane upside potential over the coming years. And all I ask from you guys is one thing only. Smash that like button on this video. That's all I need from you. Please do it for me. And if you haven't done it yet, please do it. Smash the like button. If you want to be subscribed to the channel, you can certainly subscribe. That's all I need from you, okay? If you're looking to apply to join my private stock group, get access to all my premium courses, access to my private Discord chat, become a much better investor than where you're at right now. Pin comment down there. You can click on that, fill out a form, see if we get you access to that maybe in a few days from now, okay? Alrighty, so stock number 1 of these 3 stocks that are priced under $15, it has insane upside potential, is The Honest Company. Ticker symbol this one is HNST. This is around a $4.40 stock as of here today. In the past year, the stock is up about 50%. And this used to be about $1 stock just a few years ago. But they have come a long way, and they got a long way to go in regards to this story here. Okay, now, Honest Company. You might look at this business model and you say, okay, diapers, wipes, baby care products, lotions, soap, stuff like that, right? Beauty-related products, skincare-related products, some makeup products, right? You might look at this company and you say, like, what's the big deal? Seems like kind of a boring company. Like, you know, a stock like this could not provide great returns, right? Like, it's just such a boring company, like, big deal, right? No. They did a study recently on the top best performing stocks of the past 25 years. And what they found is almost every single one of the best performing stocks, ooh, nice Lamborghini just passed by, almost all of the best performing stocks of the past 25 years, guess what they all have in common? Boring, put you to sleep companies. If we look at the top stock, right, that has returned a shocking 124,000% over the past 25 years, it's an energy drink company. Big whoopee. Okay, we put a bunch of caffeine and sugar in these things. Wow. Okay. Then we have nvidia. We say, okay, that's really an exciting company, all these big chips. You know what next is? Texas Pacific Land Corporation. Could you think of a more boring business to possibly own? You know how much that stock's returned over the past 25 years? 66,000%. Next one up here is a boring shoe company called Deckers Outdoor Corporation. It's up 50,000% in the past 25 years. Next up, FICO. You ever heard of your FICO score? I hope you have. Everybody watching this video right now, you should have heard of your FICO score before. Fair Isaac Corporation, which has a FICO score, 37,000% return in the past 25 years. Next one up here, Old Dominion Freight Company. Old Dominion Freight Company, does it get more boring? 32,000% gain. Tractor Supply Company, this list is phenomenal. 25,000% gain in the past 25 years. Next one up here, O'Reilly Automotive. You know, like the commercial, O'Reilly Auto Parts. That company, 20,000% gain the past 25 years, right? Life-changing stocks. You run the math on this, you could have put 10K into these companies and just got ridiculously rich. Never mind if you put 50K, 100K, 200K. I mean, unbelievable. So the moral of the story is, don't ever cast aside a company and say, this is a boring business model. This could... No. Everybody wants to try to find the next company that's going to be making, products on Mars. And they're investing in all these crazy things when a lot of times the best investments you will ever find in your life are the most boring, basic companies that are just become beasts over a 25-year span, right? Now, to take things up here, there's been a very important switch that has happened with Honest recently that is going to give it its next leg much higher in regards to the stock. So, I graded their latest income statement. It was a B+ grade income statement, which is shocking because if I take you back 2 to 3 years ago, this company was reporting nothing but F grade income statements quarter in and quarter out. It was an unmitigated disaster of a company on the financial front. And now they're almost gotten to grade A. It's like a student that was just horrible in school. And then suddenly you're like, oh my gosh, like they're almost about to become a straight A student. Like this is ridiculous. Like what a turnaround, right? Revenue in the latest quarter went to 97 million from 86 million the same quarter last year. Cost of revenue went to 59 mil from 54 mil. So they kept that pretty in check. Gross profit, $37 million from $31 million. Selling general administrative expenses, they actually dropped that on a year-over-year basis. So their revenue was up, we can call it $11 million on a year-over-year basis, but SG&A was actually down for the company year-over-year. Now, they're spending pretty aggressively on marketing right now. That went to $12 million from $9 million. So, but that's obviously working, right? Look at the revenue numbers. Research and development up very, very slightly here. So they kept their expenses in check pretty well. Operating income, folks. We're talking operating income for Honest now. Not operating loss, operating income of $2.5 million from a $1.3 million loss. If we look at net income, $3.2 million versus a $1.4 million loss and actually a positive diluted EPS, right? Crazy how much this company's turned things around. But keep in mind, this is just infant stage of this whole profitability cycle. We're still really, really early days in regards to this, right? Now, if you know what makes a company really special, I can tell you what it is. A company that has revenues going up, margins going up, profits going up, and EBITDA going up. And what do we find with Honest? It's all happening. Revenue up 13% in the latest quarter, right? Margins increased to 38.7% from 37%. Net income went to increased $5 million to $3 million profit versus a net loss of over $1 million. And then adjusted EBITDA was $7 million compared to $3 million in the same quarter last year. So everything you want to see on the financial front is going correctly, right? But it's not just that. The balance sheet is now like a Fort Knox of cash on this company. They're now sitting on $73 million in cash and cash equivalents with no debt. Now, what do we think that cash balance is going to build to a year from now, 2 years from now, 3 years from now? Now we're talking about actual profitability with this company. Oh my gosh. 73 mil with no debt? Keep in mind, this is a super small market cap company. I mean, the market cap on Honest is probably, it's under $500 million. It's like a $400 million market cap with 73 mil in cash and no debt. They also just reaffirmed their full year 2025 outlook. Now, keep in mind, they're probably going to come in and beat these numbers. They're probably going to come in. You know how I know that? Well, guess what? They do it almost every quarter. Oh, matter of fact, Carla has 7 straight quarters of double beats. Carla, the CEO of the company, 7 straight quarters. Look at this. 3 cent EPS beat, 9 cents, 7 cent, 1 cent, 3 cent, 1 cent, 3 cent, right? Look at the revenue. About a $4 million beat, $6 million, $3 million, $6 million, $6 million, $3 million, $5 million. If there's a company you can count on that's a small cap company to come in and quarter out and beat whatever their guidance was, you're looking at them 7 straight quarters of double beats. I mean, usually these small cap companies are super inconsistent. Carla's running this company. She's running this show as if this was like, she's running Procter & Gamble over here or something. This is unbelievable. Now, let me show you the old Honest that took this stock all the way down to $1 at its lows. Look at this. Miss, 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 double miss, double miss, Double miss, that's the old Honest. And this is the improvements Carla's made with the business model, where it's now a company that you don't have to stress over when they come in with earnings season and think, oh gosh, they're going to miss their numbers again. This is going to be awful, right? Nope. It's such an anti-stress stock now at this point in time, right? Which is a valuable thing whenever you're making an investment, to be able to trust that a management team is going to come in with at least the numbers they say they're going to do, or likely better numbers. And that's what ends up happening quarter in, quarter out, right? Now, there's three scenarios I see for Honest in regards to where the stock price is going, okay? So scenario number one is this company over the next 3 years, right? So if we look out 3 years from now, we can look out to like 2028. Scenario one is this company gets to around $50 million of net income a year, right? I don't see that being an issue whatsoever, given the progress this company's been making and seeing where that bottom line's been going, understanding where that revenue is likely trending over the next 3 years. So $50 million in net income should be easy peasy lemon squeezy for this company. If they're doing $50 million a year in net income, you put a 20 PE on them, which would be very, very fair for a company like them. I mean, if they've got strong growth rates, they should be commanding way over a 20 PE at that particular time. But, let's just say growth is really slow, but they got that $50 million consistent net income. 20 P is fair. You put it at $1 billion market cap. That's a 2x from here. Actually, it's technically over a 2x from here, okay? Because the market cap right now is in the 400 million-ish range, okay? Second scenario I see for this company. This is, I think, I would put the highest odds of probability are kind of on this scenario, personally, okay? This is where the company gets to $100 million of net income per year, okay? Now, you take that $100 million. If, once again, let's say the growth rates are really slow, so they only can command a 20 P at that particular time, right? That's a $2 billion market cap. That's over a 4x on the stock price from here. Over a 4x, okay? Let's say things go really good. They get to $150 million of net income a year, 3 years from now, right? And let's say the growth rates are really good still. Let's say they're growing like 10 to 15% revenue top line, right? Then you could command probably about a 28 PE ratio, somewhere around there, right? Which would put the company at about a $4 billion market cap, which, from this is an 8x to 10x on the stock over the next 3 years, right? That's kind of the most bullish scenario there. So you can see, like, Honest, it might seem like, oh, this is a boring business. The gains in Honest have not been boring the past few years. And I don't think the gains over the next 3 years are going to be boring. I think it's going to be very, very exciting. And people sometimes look back at these stocks and like, it seemed like such a boring company. Like, what's the big deal, right? And keep in mind, that's how a lot of people view it before they really understand what's going on with the company, right? It gets more exciting. Like even Palantir a few years ago, people were talking about Palantir as this boring company, right? Oh, so what? They're helping the government out with some data. Okay, big deal, right? Now people are like, oh, Palantir is so exciting, right? But it's because the stock prices went up for so much. Elf, when I was buying that stock for $7 a few years ago, right? Well, shoot, that's a lot of years ago now. What is that, 6 years ago or whatever, right? When I was buying that stock for like $7 a share, 6+ years ago, I mean, you could have said, big deal, makeup company, so boring. The gains aren't boring. The money's not boring, right? That's all that matters in the end. Now, let me show you another way to think about this situation. I think this is going to be very valuable for a lot of folks to understand what I'm about to go through right now in regards to where Honest stock is going. Okay, listen. If you want to compare Honest versus Procter & Gamble and Kimberly-Clark, you can, one of the only services, if not the only service you can really do something like this on is 1000xstocks.com, right? So you go to 1000xstocks.com, you go ahead and compare these three companies, right? First off, Honest is growing at a much more rapid clip than Procter & Gamble and Kimberly-Clark. Kimberly-Clark and Procter & Gamble look like they're going the wrong way, right? Honest is actually putting up nice growth rates, including an acceleration last quarter of up to 13%, right? Now, since Honest is just starting to flip over to profitability, you could say, let's value these companies on a price to sales ratio rather than PE ratio, right? Which is completely fair. Here's the deal. The forward price to sales ratio against Procter & Gamble and Kimberly-Clark, which are probably the two best comps for a company like Honest, right? Forward price to sales ratio on Honest is 1.18. Procter & Gamble is 4.22. Kimberly-Clark is 2.26, okay? So basically, Honest would have to like 4x or so its stock price, so go from $4 to, we call it $16 or so from here, just to get up to Procter & Gamble's price to sales ratio. It would have to 2x from here just to get to Kimberly-Clark's price to sales ratio. Now, I also think it's very unfair that Procter & Gamble and Kimberly-Clark would even have a higher price to sales ratio. Why should they? They have way less growth. And they're way less exciting in business models than Honest that's actually putting up great growth. So if anything, Honest's balance sheet looks superior to Procter & Gamble and Kimberly-Clark when you look at what their cash balance is versus their market cap versus what their debt is, right? So honestly, Honest should be having a price to sales ratio superior to Procter & Gamble, which would mean the price to sales ratio should really be like 5 or 6 right now, right? So when you look at it from that standpoint, you can really understand like Honest, oh my gosh, like this is got a long runway of stock price gains ahead, right? Now, additionally, when it comes to management team here, right, I told you guys about Carla. She's done a phenomenal job turning this ship around. I mean, gosh, when she joined the company, it looked like the Titanic. It looked really bad. It was a really ugly situation, and she's turned this show around. But it's not just her. This Kate Barton the company has, which she's the chief growth officer. She's been doing a phenomenal job as well. And I remember, I think it was either last year or maybe it was 12, 18 months ago, she made the higher end management team these hats that said EBITDA on them or something like that. And I was just loving it. I was like, dang, man, that's what I'm freaking talking about, right? Dave Loretta is going to be leaving the company, the CFO. And they already got the new gentleman who's coming in who looks like he has a lot of experience. Looks like he was very high ranking at Hanes Celestial here very recently. But the moral of the story is I think the two individuals that are really running this show from the Titanic to, we can call it a beautiful Royal Caribbean ship now at this point in time, I think it's really Carla and Kate. And so as long as Carla and Kate are there, I feel very comfortable investing into the stock, buying the stock actively, and looking forward to a lot of gains in the stock over the next few years. So really exciting in regards to Honest. Okay, stock number 2 of these 3 stocks is SoFi Technologies. $13 stock here today. Stock in the past year is up about 88%. So it has been a very good past year for SoFi Technologies. Now, SoFi Technologies, think of it as fintech meets banking, right? And so everything you would expect to do from a banking side, it has that, right? But it also has credit cards, investing, loans, right? You can get a home loan through SoFi, or student loans, or personal loans. You can get credit cards through them, right? You can invest through SoFi, all those sorts of things. So it's like a one-stop shop for just about everything money related, right? Now, SoFi then can go ahead and basically off-sell other loans. So let's say SoFi, let's say you're a SoFi customer and you want to get a car loan, right? And so you apply for SoFi to get a car loan, but let's say SoFi says you're too much credit risk, right? Because SoFi a lot of times only wants higher credit people, higher net worth folks to really give them loans, right? Well, you don't want to necessarily not make some money from that. So what SoFi could do is they could go ahead and sell that lead to somebody else that will then go ahead and offer a loan, whether it's a personal loan, a car loan, whatever, right? So SoFi doesn't have to take the risk, but they get to make straight profit, straight margin because they have so many people using their platform. Anthony Noto recently said the far majority of people that apply for different, loan related products, they have to turn them away, right? Well, instead of just turning them away, now they can go ahead and they have ways to make money off of that, which is straight profit, right? Making fees rather than trying to take loan risk in regards to this overall. Now, SoFi is doing a masterful job at attracting new members. They call them members. You can call them customers, however you want to look at it, right? But SoFi is up to around 11 million members now at this point in time, right? Compound annual growth rate over the last few years of 52%, right? They went from 3.4 million members to 5.2 to 7.5, 10.1 in this latest quarter, 10.9, right? And so the end of this year, SoFi should be, I would say lowest end probably 12.5 million members, potentially 14 million members by the end of this year, right? Which is an unbelievable accomplishment. And once you have all those members, once again, you have so many different products to go ahead and sell them essentially, right? Now, if we think about the biggest banks out there, the biggest banks, these ones can have 60 million plus customers, right? When you talk about the Wells Fargo's, a Bank of America, Chase, those sorts of guys, right? Basically, you're a big dog bank if you got 50 million plus members, customers, whatever you want to call them. But it's pretty clear, if SoFi keeps executing, they're going to get there, right? They're going to get there. All they got to do is keep executing, make it through future recessions, don't go under, right? Like a lot of banks do in recessions. Get through to the other side, keep growing, keep attracting new members, which they're doing a phenomenal job, especially when it comes to millennials, Gen Z generation, right? A lot of the folks that are digital first, right? Rather than branch focused. So gosh, I mean, SoFi's just in a great position. Now, here's where it gets really interesting in regards to how big the potential is for SoFi stock to explode to the upside here, okay? So what I'm showing you now in front of you right now is the largest market cap financial institutions out there, the banks, right? JP Morgan has over a $700 billion market cap on it. Bank of America has over a $300 billion market cap on it. Wells Fargo over a $200 billion market cap on it. SoFi's market cap recently has been trading somewhere between $10 and $15 billion, right? Listen, if over this next decade, SoFi just keeps attracting members, right? They keep selling more and more products. They become a financial giant over this next 10 years. Like they're going to become one of these sorts of multi-$100 billion market caps, right? And think about how small this company is as of right now. And it's very clear. You look at the trajectory and you're like, dang, man, if they just keep executing, the world is theirs. No, Anthony Noto, right? Listen, a CEO in regards to companies that you're going to buy that are $15 or less stocks, they're everything, right? And CEOs are important no matter what type of stock you own. But when you're under $15 a share, the CEO is very important. I just showed you an example before of Carla, who came in, shortly after she came in, was the stock $1 a share, and look what she's done, right? And don't be surprised if Honest is $10+ by this time next year. When it comes to Anthony Noto, he has a very impressive track record prior to him joining SoFi. Previously, he was a managing director at Goldman Sachs, CFO of the NFL, and the COO of Twitter, back when Twitter was a little more, we can call it. I don't even want to get into that, okay? SoFi Technologies. Here's the deal, okay? Now, if you look at the company recently, their revenue's up substantially. Their net interest income's up substantially. The only thing you could poke at and say is bad in regards to SoFi is spending, right? We could say it's a spending problem, right? Because they are just spending money left and right. Like, as soon as they get money, it's going right out the door. And so their net income for the latest quarter only came in at $71 million, despite net interest income being $498 million. But here's the deal, okay? We could look at that as a negative and say, hey, they got a spending problem. Look at how much money they're spending. But listen, if you're SoFi, what are you trying to do? Who are you trying to become? Well, I just took you through it. You're trying to become a financial giant. I think Anthony Noto wants SoFi to become a financial giant, a JP Morgan, a Wells Fargo, a Bank of America, right? A company that will emerge way more profitable than those old dog companies, because the old ones, guess what? Those ones had to build a branch every 10 feet in a city, right? And had to have this like big footprint, whereas SoFi is just digital first, right? Which allows them to be much more asset light than those traditional banks that had to worry about building thousands and thousands of locations everywhere, right? So they're spending, but ultimately at the end of the day, it's because they're going after this massive thing. So the name of their game is, we got to get to 50 million members over the next 10 years. And how do you do that? You're going to have to spend a lot on marketing, right? You're going to have to spend a lot on your teams. Like, it's just the way it is, right? Now, here's the deal for SoFi, right? If they become a banking giant, right? If they really pull this off over the next 10 years, you're going to be talking about a stock that is going to anywhere from 10x to 100x the stock price if they really become a banking giant. And that makes SoFi extremely exciting, because if they really pull this off, and you look at the numbers, you look at the data, and it's hard to disbelieve, why would they not pull this off? Look at how many members they're attracting. Look at what's going on with their revenue, right? Why would they not pull this off? Anthony Noto's been leading this company through a lot of messy situations already. High inflation, low inflation, Rona, student loan pause. He's led this company through so many messes already, got them out to the other side. If there's a guy that's kind of proven that he's going to be able to get this company through future recessions, gosh, it's probably Anthony Noto. So we could be talking about a stock in regards to SoFi that, between 10x's and 100x's over the next decade, right? Which is a life changer. Like, if you can make between a 10x and a 100x in a 10-year span, it's a life changer. So SoFi looks pretty darn good here. Now, let me take you through another scenario that could happen in regards to SoFi. Okay, listen. JP Morgan, Bank of America, Wells Fargo, these type of companies, they should try to buy out SoFi quick. I would try to buy out SoFi in the next 12 to 18 months if I was these companies. I would try to make it happen any way you can, okay? And here's why. We know SoFi is clearly having tons of success attracting the younger generation, right? in getting those millennials, a lot of those Gen Zs, and then they're going to be they're going to be probably one of the most well positioned to attract Gen Alpha and those folks to create bank accounts, right? Why would you not try to buy out SoFi? Like, if I was Bank of America, Wells Fargo, any of these companies, man, I would be, because here's the thing, like Bank of America, Wells Fargo, a lot of people don't want to own those stocks. They usually trade at very low P ratios. Like, usually those stocks trade at P ratios anywhere between like 8 and 12, because a lot of people look at them and they're like, what about the future? That's what they are. What about the future in regards to these companies? And there's a lot of doubt around that because of companies like SoFi, right? Now, additionally, you think about somebody like JP Morgan. I think JP Morgan it'd be very intelligent for them to try to buy out SoFi. Not because necessarily they need the SoFi members or something like that, although that would be great. But Jamie Dimon, he's been such a famous figure at JP Morgan for years now at this point in time. He's always a guy that can go on TV and go on CNBC or Bloomberg or wherever and talk about the state of the economy, talk about JP Morgan's business, right? He's very well trained and all that, does a phenomenal job. Listen, Jamie Dimon is likely retiring in the next few years. Some believe he's retiring at the end of 2026. Some say it's 2027. Some say it's 2028, right? And from my understanding, there has not been a successor picked yet. I think it would be really intelligent for JP Morgan to buy out SoFi, right? You get all that growth and all that future growth of SoFi, but then you get Anthony Noto, who get him trained right under Jamie Dimon for a few years, make him CEO of JP Morgan, and you got your guy that's ready to take that limelight, right? Because Anthony Noto goes on these, financial media places all the time and speaks about SoFi's business, speaks about the consumer, speaks about the economy. He's almost like the perfect person to take the spot of somebody like Jamie Dimon when Jamie Dimon decides to retire. So, man, I think that would be very, very intelligent. But we'll see what happens. My hope is no one buys out SoFi, because I think the stock has the ability to 10x or 100x over the next 10 years, right? As long as they can make it through recessions, keep growing larger and larger, like they're going to become a financial giant, right? Alrighty, stock number 3 of these 3 stocks that is under $15 that has some incredible upside potential is Fubo TV. Ticker symbol on this one, FUBO. $2.70 stock as of right now. This stock in the past year is up 88%. How about that? The 8s are coming through, right? Now, Fubo TV, if you don't know, streaming platform. Competitor, the most direct competition I could think for them is YouTube TV, right? And they have different packages. These are their 2 kind of most popular packages, at least in my opinion, their Pro package and their Elite package. And here's the deal, okay? If you want the traditional TV type experience, but with, let's call it streaming ability, right? Fubo is the way to go. And especially if you like sports, because, Fubo has just it's the ultimate sports platform in my personal opinion. That's what attracted me as a Fubo customer. 2 things attracted me was, 1, I love college football. College football is my favorite sport. And so the issue is college football is on 1 trillion different channels. And you need a lot of channels to go ahead and watch college football. And so I have like their highest end package at Fubo. And there I'm able to watch all the college football games I could possibly want to watch, right? But additionally, they have this tech where essentially you can watch 4 games at one time. Yes, 4 games at one time on your TV. So let's say you got an 85-inch, flat screen at your house. Boom. You can watch 4 games all at one time, all on the same TV, rather than trying to do old school and try to flip back through the channels and all those sorts of things, right? Now, in regards to Fubo, the income statement was not an F. And that's a huge accomplishment for Fubo. It was a D+ income statement. If we look at total revenues, went to $416 million from 402. Operating loss got cut down to 25 mil from 63 mil. And then additionally, if you look at net income, they actually had net income positive of 188 mil from, we can call it a $56 million loss, right? Now, additionally, gain on settlement of litigation, that was a one-off there, but they did win the big, basically they got a big payout from the lawsuit they had against some of the big TV providers that were kind of, let's just call it not playing the game very right. Okay, they were doing some dirty stuff, at least in my opinion, and Fubo ended up being, in a very good position in regards to that, right? Now, they also say something very important. David Gandler says here toward the end of the, we can call it shareholder letter, right? He says, in summary, we are pleased with our performance in the first quarter and remain focused on our goal of achieving profitability in 2025 for our global streaming business. We also remain excited about our agreement with the Walt Disney Company to combine Fubo with Hulu plus live TV, which should take them to like 6 million plus subscribers, and its potential to increase competition in the paid TV space. We continue to work through the regulatory process and look forward to sharing more information when we are available, right? That deal should likely go through at some point this year. It's just a question of when is it going to go through, right? Now, additionally, he says, as we have previously communicated, our skinny bundle offer will include a sports and broadcasting service, in addition to featuring content from the Walt Disney Company, which owns ESPN, by the way, and a bunch of other sports-related networks. We are working hard to secure content from non-Disney programmers for the new service. It is critical for Fubo subscribers that we are able to negotiate content licensing agreements at their rates and terms. Our goal remains to launch this service for the fall sports season. Now, that's a big deal. The skinny bundle essentially is this concept of like being able to have a lower price product. Let's say something that's priced more $29, $39, $49, something like that, but has more like the sports related content like somebody would want, rather than paying, let's say, $100 a month or $150 a month or something like that, right? For, let's call it, this crazy package you have where you got a trillion different channels and like 10 of those channels you actually watch, right? So what good is it to have 500 channels that you have access to if you watch 10 of them? Right? So that's where skinny bundle comes in, and then we could be talking about a way to increase Fubo's business quite dramatically, right? Now, additionally, if you look at the latest numbers here, their cash and cash equivalents look to be around $321 million. Now, that's a huge number. You know why? Because Fubo's entire market capitalization is a little over $900 million right now. And once again, they got $300 million plus in cash and cash equivalents. And it's not like the business really needs crazy cash nowadays, because now they're getting close to flipping over to profitability. So how beautiful is that, right? Now, if you think about the past companies that were really dominant in this space, right? DirecTV ended up getting sold to AT&T in 2015 for $67 billion. Once again, Fubo is a $900 million market cap, right? Dish Network in its heyday was well over a $30 billion market cap, right? Now think about that for a moment. Dish Network over $30 billion market cap. DirecTV got sold for nearly $70 billion. Fubo's less than $1 billin market cap right now. And those companies had to go to your home, set up like satellite dishes, and you had to have these boxes and all those sorts of things. Like, I think Fubo is going to be a much better business model. And Fubo's peak is a long, long time from here, right? So here's the deal with Fubo. Under $1 billion market cap, they're cash loaded on the balance sheet. They look like they're ready to flip to profitability, right? Disney deal should be cleared at some point in 2025. If for any reason that Disney deal doesn't go through, from what I remember when I was reading through the legal related stuff, Fubo would get a 9-figure payout if for any reason that Disney deal's blocked, but it should likely clear it at some point in 2025. And we got skinny bundles coming here. I think Fubo's pretty darn compelling, okay? Appreciate y'all joining me as always. Hope you guys really enjoyed this one. Hope you appreciate me sharing these stocks with you here today. Only one thing I need from you guys, other than smashing that thumbs up button if you didn't already do so, is if you're looking to apply to join private stock group, private wealth group, get access to 1000xstocks.com. If you're looking to join my private Discord community, get access to all my premium courses so you can become a much better investor than where you're at. Pin comment down there, click on that, fill out a form. We can see if we can get you access there sooner rather than later. Much love and have a great day.